Mark Newton, Global Head of Technical Strategy at Fundstrat. Mark, great having you on. You say 3810, just like Steve. 3810 is the key level for the S&P, 280 for the QQQ NASDAQ ETF. That's right around their May lows. Do you see them holding at those levels?
Hey, Frank. Yeah, thanks for having me. I do think there's an above average chance that these can hold for a couple different reasons. One is that, this entire sell-off in the last few days has been driven by the dollar and yields moving back up. Now both of them are near sort of critical resistance, and I think actually they can hold into the Fed meeting. My own cycles and Elliott projections show that yields should start to back off in the months to come. So I actually like, buying TLT. But S&P for now, you look at the SPX, that is certainly a very key level. I do think that probably can hold simply because, look, technology has done better in the last month. If you look at equal-weighted technology and strip out the FANG, Invesco's RYT is actually positive over a rolling 1 month period versus XLK has been down. But technology as a broader group has done a little bit better than one might expect. And that's a very positive reason.
Mark, we appreciate the insight, the little technical analysis. Pete, I want to take that over to you. Do you agree with this thesis? Do you believe there's some merit there that those are levels where the markets, the S&P can hold, the QQQ can hold?
You know what, the way things feel right now, I don't know that that's possible. As a matter of fact, when I look at what people are buying in terms of the puts that are getting bought in all the major ETFs of late, that's been pretty interesting. And on top of that, how about what was going on just the other day with the volatility index? People were buying the VIX calls. They were buying the 50 strike calls, 95,000 of those going out to July. So gives me an idea that people are expecting something that's going to be pretty big and maybe bigger even than those levels. So could we go under those levels? Absolutely, we could. I'm not saying we will, but I think there's certainly a possibility.
Steve, I'm going to let you finish your thought. You're saying 3450 is the level to watch on the S&P?
3350.
3350.
Yeah, I mean, it could be a smidge lower, but if we have that, you're going to see panic. The problem is, if it's a different rate environment, then that doesn't stand because that's the only thing that's changed. So I always looked at the benchmark of Feb 2020 before we fell off a cliff. Mm-hmm. So that's what I'm looking at for the indices.
And I think, Frank, what we're doing is we're pricing in interest rates, and we've talked about the move in interest rates, but we haven't really yet priced in demand. We've had this conversation on this desk, I think, for 2 months where, I'm sorry, I'm waiting for Apple to give me a demand, at least some sense that you're getting a pullback. And I think that's part of the story. We know that rates have moved higher. We haven't heard the street pull back their target. Street's still talking about 7-8% earnings growth on the S&P. I think you have a case here where we've got at least some dynamic where we have not even felt the demand impact of any.
So real quick, just to put a button on it, the QT, and we talked about this, QT just started. So you've had a couple of things going on. They stopped asset purchases, they're raising rates, and now they're doing QT. You can't call a substantive bottom until we see how QT, what that effect is in the rate environment.